All right, welcome back. We are live, baby. Market's opening here in about 6.5 minutes. All right. Yesterday was a decent day. Caught a couple of trades. Moderate green day. We haven't really had the opportunity to have some blowouts. But as far as account maxing out, we're not even close. Yesterday we were trading 6 Apex PA accounts and 2 Take Profit Pros. Today we're going to be trading, we'll do 7 Apex PAs and the same 2 Take Profit Pros. And we'll see what we can get done here today. I'm excited for today after yesterday's big move. Hopefully the whole volatility concern we had last week is kind of done now. But we'll see if that ends up being the case. Now, let me pull up news. See what we have here. Okay, so that's right. So 15 minutes after the opening bell, we get the US S&P manufacturing PMI final read. A little bit of volatility, not much, but the real volatility for today is going to come at 9. So it's 30 minutes after the market opens. That's JOLTS job openings and US ISM manufacturing PMI. Really, it's going to be the JOLTS job openings number. The forecast is 7.655. This isn't like a CPI, by the way. It's not going to be crazy, but it will move the market for, a minute or two. That's really all we have. And then we have a White House press briefing here at noon. A couple of Fed speakers already spoke here really one this morning. So that's it. As far as news, it's a pretty clean day. But 9 o'clock will hold off the maybe 4 minutes surrounding that 9 o'clock top of the hour. So pretty clean to trade as we want here today. What's up, guys? How you doing? In the chat, what's going on? You guys trading evals or funded here today? It's interesting. We had a lot of evals last week out of you guys, and then yesterday we were moving more into funded accounts, which tells me you're passing, which is good news. And now, today I expect all you guys to be trading funded. All right, cool, guys. Did you write your business plan yet? I told you guys last week that I really think for prop, you got to have a business plan. How much are you willing to invest? How long do you look to keep the average funded account, which dictates how aggressive you go? And then how much are you looking to get as far as revenue generation? I think it's really, really crucial to have something like that, at least mentally. What a lot of people do is they just throw money at the evals, and then they get their hands on a funded account and they don't know what to do. And they blow them because they trade them the same way they traded the evals, which I think you should trade the evals aggressively. I'll get a video out pretty soon here for you guys. It might be today, we'll see. How I trade evals, and you might be shocked, it's a little aggressive. But then the funded, you guys see every day on stream, it's relatively conservative. But a lot of people, they get their hands on the funded accounts, and then they freeze, and they don't know what to do, and then they trade way too big and just blow them, and they never end up actually fulfilling what should have been a written out, or at least thought out business model. Okay, make an investment, look to get a return. That's really what prop should be. Exploit the Vibe says, I'm only making $150 and stopping because it's addictive and I get into trouble. Yeah, trading addiction's a real thing. I think a lot of that is going to have to do with firing at the hip. And when you go to the casino, if you're going to the casino, which hopefully not too much, you're firing at the hip. And if you trade the same way, it starts hitting that same lizard brain part that we don't want to hit too much. They've done a lot of studies on making and losing money and how that impacts the human brain. And it's troubling just how, I think, coded into us that part of the brain is. When you lose money, it really hits that lizard part. And it's hard to control, which is why I think it's better to, rather than brute force have emotional control, I think it's better to just put yourself in a situation where it's easy to have emotional control. And some of that comes with experiencing pain over and over and over again. If you keep hitting the same button of going on tilt, because when you're new to trading, going on tilt feels good at first, right? Because it's gambling, it's hitting that part of your brain. But when you keep hitting that button and you keep getting shocked, you kind of stop going back as often because it fucking hurts. So that, you know, those days are actually good. Those hard days, they compound. Okay, starting out with some funded, working on 5 more Apex evals to have 20 funded Apex accounts. Cool, good work, Chris. I'm trading my evals like I want to trade a funded. Yeah, listen. What I said, by the way, is not like best case scenario. That's just what I do. Especially if you're newer, you should trade the evals like you plan to trade the funded account. But once you get to a point where your business plan is to just get in the funded accounts and then do what you do, I think it makes sense to be more aggressive in the evals. At that point, is it the best way to go to do it as cheap as possible? No. Nico, why do you trade NQ instead of ES? So I had this conversation on stream a few days ago. It's not some big reason, but there are 2 reasons. Well, there's 2 reasons. Volatility. And in the same kind of umbrella of volatility, commissions. In my experience, when I ran the calculation originally, there's the bell. Let's see what we get. When I ran the calculation originally for commissions, usually on the same move between ES and NQ, you get a little bit of an outsized move percentage-wise out of NQ. Okay, all else held equal, so to speak. So what that means is commissions that you pay for a slightly larger move are actually you pay the same commission for a slightly larger move, which is why, you know, I think plus chop. ES, I think, for my trading style, it tends to just chop me up more. But listen, the OGs, like 20 years ago, ES was like NQ is today. ES was the product to trade. So I'm not going to sit here in today's generation and say NQ is the product to trade. The product to trade is the product that makes you money. And it'll change probably 20 or 40 years from now. Big old dump off on the open here. Gonna let this work itself out for a few minutes, then we'll see what we get as far as setups. Volatility, just want volatility here today. I want that to keep up. Zachary says, could really use some advice on how to best set your stop loss or how many points you decide to set it at. It's a very nuanced answer to that question. It seems like more times than not, I don't have it set low enough. So if you're struggling in your trading, guys, here's a really good piece of advice. Size way down, at least to start, and trade with wider stops. If you're getting chopped up, that is the answer, and you'll probably perform better. Obviously, there's no guarantee. You might perform worse. But if you're getting chopped up with 5, 10, 15, even 20 point stops, cut your size in half or more and widen out your stops by double or more. Because I think what a lot of people go through is they're like, fuck, I was right. I just got chopped out. Okay, well then trade a lot less size and give the trade more room. Your average trade duration will go up. Okay, but just because a trade takes 6 minutes doesn't mean it's not scalping anymore. Scalping in my head is really anything under like a half hour. All right, here we are testing that high. There's a break, taking out a few stops. Maybe a 5-point move from those stops. Again, when you see levels set in pre-market, there's not going to be a ton of stops just because volume is lower in pre-market. Levels that get set once the market opens are going to have more stops sitting above or below. You guys haven't already, if you could, press the like button. Helps out tremendously. Even a few people doing it really does make a noticeable difference. I appreciate it. Big old push. I'm gonna let this market settle here for maybe 6-7 minutes. Otherwise, we have nothing to go off of, right? I need to see a development after the market opens. So let's look at the daily. You guys see, as far as market inertia, what have we seen these past few trading days? Well, we've seen expansions in the range now, right? Whereas previously things were really tight back here. Now we've expanded the range a little bit, made a little test of that low. Now we're trying to bounce, sure. So we'll see what that volatility brings today. Ideally, we'd hold the volatility we've seen the last couple of days. It was a bit tougher to trade when there was that volatility collapse we had last week. That was really tough. Still able to work out some green days, but not setting records or anything last week. Do you sometimes get tilted and emotional, even after all these years in the game? Of course, it never goes away. It just happens less often. You don't just become a robot, you know, year 8 or whatever. This happens less often. If you get tilted, you know, 3 times a week early on, eventually you get to a point where it happens 3 times a year. And, you know, there really is something to be said for, at some point, this is what you do. You know how things play out for you over the week, month, year. The more reliable it will play out over the bigger time frame. And you just, like, don't really care anymore. I mean, you care, you want to make money. I want to get better, I want to get bigger, I want to perform well, I never want to stop growing. Becoming stagnant to me is a huge, deep-rooted, like, fear since childhood. But you don't really care about losing trades anymore just because it's happened so many times. It's like ripping off a Band-Aid. If you never lose a trade ever, those first couple losses really suck. But if you lose many times a week, who cares? So letting this thing develop here, give it maybe 4 more minutes, 5 more minutes, and we'll really start looking. Have you considered using a volume-weighted average price instead of the 20 EMA? I love volume-weighted average price for trading stock. For futures, since I don't consider volume nearly as much, and I guess, you know, well, since I don't consider volume as much, I don't know, I just throw up a 20 EMA and use that for context. It's a tier 2 or 3 indicator anyway. I'm really just looking at price action. I could take the 20 EMA off and trade fine. I just throw it up there to have some kind of, I don't know, context on the day. Give me some sort of direction of where that kind of average sits. Okay, so we've now tested the highs. If we look at the 5-minute, I think this gives us a good look here. We could end up seeing a test of these lows, which I would actually love to see. Because when you go downside, volatility increases, and that's what we need here, and that's what we've seen the last day or two. Trading day or two, that is. And that has been very helpful, actually, in getting high-quality setups, getting that volatility increase. That volatility collapse was an absolute disaster. So I would love to see a downside test of that 19.3 area. And that could, if we were to get that, that could set a nice little trend for us. But I just got to do what the market tells me here. Now, you look at, like, here, I just want to show you guys this. You look at these wicks, right? Again, don't make the mistake of thinking there's a ton of stops below here. There are going to be some, but those are going to be set by people who really entered trades more so pre-market, which is not nearly as many. So you can't really expect some big 10, 15 point move when you break each of these wicks. Maybe down here, sure. But these two, that's pre-market liquidity. It's going to be lower. So by the way, that Apex deal, 80% off, that ended last night. So I went in and checked this morning what they changed it to. They changed it to 71, so it's actually not too bad. But it's not 80. But 71 is still, it makes the numbers work just fine in the business model. Because that ATR is getting yanked up. Man, we're actually seeing nice movement. This is a good start to the day. But I gotta let this range develop here. See what we can get. We're getting 35 to what we get. 35 to 60 point ranges on these bars. That's not bad at all. That's good to see after a week-long winter of very low volatility. Should be some stop hunting at 19,215. Looking at yesterday's moves, if the market starts to heading that way. Yeah, that 19.2 area in general should have some liquidity in that region. I mean, it would have gotten triggered, you know, if you look back to mid-March, like March 11th, March 13th, there were some bottoming wicks down there. Those would have gotten taken out yesterday. So that liquidity might not be nearly as much anymore, but based on yesterday's movement, yeah. Charting software, that is what you're looking at right now. That's NinjaTrader. This is the kind of the OG. This is what I prefer, Thinkorswim. Most new generation, well, I don't know if I can say new generation, I'm not old. But most people that you'll see, a lot of people are using TradingView. It's good. It's gotten great over the last few years. If it ain't broke, don't fix it. We've had so many days of a dead pre-market followed by an exploding market open. Some real patience, maxing conditions, LOL. We've had so many days of a dead. Yeah, so today is a fantastic explode of volatility off the open compared to what we've been seeing. Okay, so I'm excited about today, man. We've been seeing, like last week, if you guys were here, oh my goodness, the open was brutal. We were getting like 24-point ranges. $40, $49, you know what? This is going to sound kind of crazy, but some people will say 10 years, 15 years. I think for a lot of people today, if we can just stay alive for another, you know, it shouldn't be a problem for most of us, for another 20, 25, 30 years, the advancement of artificial intelligence has been so ridiculous. I mean, it is so exponential, it's almost scary in a good way. And when we apply that to medical, I think we're probably going to see a lifespan jump that we haven't seen in quite a while. But we have to stay alive to see that. So that's an exciting thing. What's really important is quality of life, right? We don't just want to live and be old and unhealthy and not be able to do what we want. But I kind of have a feeling that, you know, 60, 70, you're going to see in 25, 30 years, you're going to see a lot of 60, 70-year-olds that look like they're 45, 50. which is kind of wild. Maybe not look that way. At least they move that way. All right, letting this baby develop here. We're finally getting a little bit of something to stick. A lot of times what happens off the open, you just get a lot of back and forth price discovery, and then the market decides, okay, here's what we're developing, whether it's a channel or a trend, but I like to wait for that to occur. Oh yeah, you can get chopped up in this real easy. Yep, so we got some news hitting. It's not going to be tremendous. All right, 5 seconds out from US S&P manufacturing PMI final. Let's see if it moves the market. No result yet coming through. Yeah, it probably already hit. There's nothing. There's nothing. This is not going to move. The JOLTS job openings. Okay, here it is. 50.2 on the US S&P manufacturing PMI. That's 50.2 actual. The forecast was 49.9. So the quote-unquote real volatility today, it's not not going to move things tremendously, but that'll be in 15 minutes from now. That's the JOLTS job openings. And we'll see what we get there. Alright, here's the test of the highs. We have that one wick, though. Here, this will show that wick better. If we end up seeing an uptrend here, I would really love to see, I want to first of all see a break of that wick and then a bar or two to let those orders above the wick clear, and then I can start doing some decision making. But this here, we're kind of still in that range. This here is chop. Okay. Here's the test. Okay, there's some stops. Couple. Not a whole lot, right? This is going to be developed right after the open. Couple point move only. Now, with futures, well, with a lot of products, but especially as of late, with a little bit lower volatility that we've been seeing, right now we're trying to go red to green. Okay, we're 3 points away. So sometimes you end up seeing a little bit of a hang up there. It's just worth considering. It's kind of like an EMA. It's kind of like a second tier consideration. I don't think it's worth trying to short like the break-even point on the day, because a lot of times it just treats it like nothing. There's very little edge there, if any. But you can see it at least hesitate in that region. And here we are not seeing it hesitate, which is beautiful. So let's see if we can get a bull bar or two closing near its high, which would be fantastic. This bar here closes in 1:25. And that high that we saw, at least that recent high, about 50 points out. Okay. Minute out from the close on this bar. If we can get a close near the high, it's a bit of a tall order, but if we can get a clean close on this 2-minute bar right at the high, I'll take a stab and buy the rollover. Buy high, sell a little bit higher is that strategy for continuation, but we're getting a pullback here, a wiki pullback, so we would need to see the sellers either step out or more buyers step in for the more recent information on the close. 30 seconds out. Nico, what's the bar width on NinjaTrader? Well, to be honest, I don't know. Here. Give me a little bit. I'll pull it up for you in a second. But first, I need to see if this baby can give me a trade. Looks like we're going to get a big old wick. Those sellers are stepping in here. There's the rollover. No trade there yet. Perhaps this next bar will give us something. Okay, for NinjaTrader, my bar width is 15. No, I do not use Bookmap. No particular reason. I just don't overcomplicate my trading. Price action is king. One more 2-minute bar, clearing the high, closing near its high, and growing, to me would be a buy rollover. Or a rollover buy, I should say. As long as it's not a massive bar that puts us right into this high. I still need room, right? But if you are looking at trades, remember, 7.5 minutes out from now, we get JOLTS job openings, which will be a little bit of an injection of volatility, but again, not a ton. It's not going to move the market like crazy, but it will move it a little bit. It'll wiggle things. big pullback here. Market doesn't want to cooperate with continuation. That's fine. Develop a trend. I'll trade it. I'm sorry, a channel. I'll trade it. So when you get that little trend attempt and then it fails and pulls back, you really are left with two options, which is what we're looking at right now. Are we going to see this develop into a channel, a range, in which case I'll limit order scalp reversion? Or do we end up seeing a trend development in either direction? Doesn't matter to me. In which case I'll continuation scalp. But before either of those things can get done, market needs to decide what we're doing here. All right, news in 4 minutes. Again, U.S. ISM manufacturing PMI and U.S. JOLTS job openings. Okay, we're testing the 20 EMA on the 2-minute and on the 5-minute. We just broke the 2-minute top right, and we're testing the 5-minute top left. If we could get well, I'm looking here. If we could get a nice, relatively big bear bar here, closing near the low in 90 seconds from now, I would be interested in selling the rollover for continuation down toward, if not a little bit through, that wick off the open. That bottom off the open, I should say. So that's what I'm watching here. Make sure the copy trader is all set, right? All right, about 60 seconds till the rollover. Oh man, we're coming right into 9 o'clock. We'll see. If we get a beauty of a setup, I think I will take it. But anything less than that, I'm going to have to hold off because we're getting news. Okay, that's fine. Didn't give it to us anyway. That's okay. All right, we got news in 2 minutes. The biggest news of the day. Hopefully we can just get this out of the way and then see some real price action, not just waiting for this to hit. All right, we are 60 seconds out from Jolt's job openings. Let's see how much this actually moves us. I'm betting no more than 40 points, tops. I'd be very surprised if we saw a move bigger than that. $30 seconds. Ten seconds out. There's the number, there's the chop, and the wicks. All right, let's see what it came in at. I don't have it yet. Okay. US ISM manufacturing PMI came in at 49.0 compared to the 49.5 forecast. Jolt's job openings forecast was 7.655 million. It came in at 7.568. It's gonna chop us around here. Okay, now as far as news, we're pretty now free and clear for the rest of the day, which is good. Get that out of the way. Where do you check the up? That was just financial juice. Financial juice is great. You're not going to get the headlines instantly. If you trade headlines and you make a lot of money trading headlines, you should probably just get a Bloomberg terminal. I don't trade news very often, so financial juice is fine for me. Okay, let's see what the market makes of that. Clear out these orders, clear out the people who care about the news, which is going to be not a whole lot for that. And then get some real price action going. That's right, you can always get a random news headline. Okay, there's the break. Downside through those recent lows. Let's see if we can get one more bear bar closing near the low. 2-minute bar here. This one just started. So I'm really looking here at this bottom. If we can get a downside push through there and closing near the low, I will sell the rollover. Yeah, Eric, last I talked to them, I don't know if they released their numbers publicly, Bloomberg, but it was actually a little higher than that, if I remember correctly. It's not cheap, but it's a tool. If it makes sense for you, then you probably should have it. It just doesn't make sense for most of us. All right, well, now we're just trading in this range here, so we got to see this baby make a decision. What I am thinking, potentially, is we may be in the very early stages of a descending channel, okay? Which would be fine, but we haven't had our 3 touch points yet. All right, well, I'm going to let this work itself out. I'll be back in 2 minutes. All right, it's about damn time. We're getting a little bit of movement here. So this looks to me like the early stages again of an aggressive descending channel with the potential for a downside break. So I have a couple ideas here. I'll let another 60 seconds or so pass. That's when this bar will close in about 1:15, and then I'll let you guys in on what I'm thinking. Would you mind elaborating the 3 touch points as it relates to the direction of the play taken? Are you looking to move with the trend on a rejection or a reversal from the breakout? So in an ascending channel, I prefer to buy the support after 3 support touch points. In a descending channel, I prefer to sell the resistance after 3 rejection touch points. Now, if I'm being more aggressive in a descending channel, I will buy the support with a more aggressive approach. If I'm being more aggressive in an ascending channel, I will sell the resistance. But those 2 trades are far more aggressive than the previously 2 mentioned. Okay, well, there's the rollover of that bar. That turned into a big old doji. Quicksilver, is that only on the 2-minute time frame? No. So everything that I talk about is pretty much relevant on every time frame. It's just a matter of how quickly do you want your information. So a 1-minute time frame for me, a little too fast. You get a whole lot of false, at least I get a whole lot of bad signals. A 5 minutes, a little too slow. I don't get enough setups. I mean, you see, even on 2-minute, I'm very patient. So a 2-minute to me is a good balance. And when the market is a little bit more normal, like the last week, it's been a little slower than usual. Okay, here's a downside break. That's good to see. If we do see a close near the low of this bear bar, I think I'm going to sell that rollover. But when the market's a little bit more normal, the 2 minutes a really good balance for me. Now, you might say, well, in a slower market, should you switch to the 1 minute? No, because the quality just falls too much. So I just suck it up and take a few less trades. That's fine. But we're gonna get something here. 45 seconds out from the close of this bar. Good, we're seeing a bit of a fall through. You can see we're attempting to fall through that pre-market low here, around 6:30. 30 seconds till the close of this bar. Good, good. See if we can't hold down near the low. Kind of pulling back to that wick. You guys see that on the 5-minute here? So I want to see it close a bit lower. Here's the rollover. It's a bit of a, I'm sorry, the rollover on the 2-minute. Okay, so I'm trading off the 2-minute, but I'm looking at the 5 for context. You can see we pulled back hard right above that bar. I'm gonna let this next candle here develop. There we go. And the bottom falling out a little bit more reliably here. All right, 50 seconds until this bar closes. Give me something I can work with here. All right, 20 seconds out. I want a little bit more of a growing bear bar closing near the low. A bit of a wick pullback here. It's ugly. It's shrinking. Here, look at this. Gotta wait another 2, see if we get something better. You guys see how these bars the size of this bar, the range, right? Kind of the setup bar. And then you get the potential entry bar here, shrinks, still pulls back. Now, there is an exception. I will sell the rollover of a shrinking bear bar if the close is just beautifully at the bottom, but it can't be like a tiny little bar. This is kind of a discretionary thing. I understand I'm probably not explaining it very well, but there's not a perfect way to explain it because it's just discretionary. All right, so now 55 seconds out from the close of this 2 minute. Now with that shrinking bear bar, we might see this at an attempt at a reversal here, but I would love to see this bar fall out and give me an entry. Nico, what's the idea behind using the sim account as the leader account? So, well, first of all, here we got 20 seconds out. I want to see how this bar closes. So I've done it both ways. I've used funded accounts as the leaders. I found Trade-Evate accounts to be a little laggy, especially the first trade or two of the day. Rhythmic can also be that way. I know some people say, oh no, the funded accounts, you should use them as the leader because they're quicker. And here we're getting another shrinking, you guys look at this, we're getting another shrinking bear bar, at least body. Okay, so the bulls are coming in trying to prop this thing up. So, of course, I don't want to get short ahead of that. I want to see that bottom fall out and give me an actual reason to get short. Or an actual reason to get long here if we end up seeing a reversal. So a lot of people, what they'll say is, well, you should use the funded accounts as the leader. If you look at the logs, the trading logs, they're quicker. And fine, maybe that's true. However, in real life, I have found the sim to be snappier, more reliably to use as the leader. That's just what I've seen. Well, bull's trying to prop up a little bit of a reversal here. So, again, I'm still looking at that same descending channel. That's very obviously on your screen. Also with the potential of a downside break. So those two ideas are top of mind for me. All right, bull's really trying to reverse this baby here. Let's see if they can. I don't care who wins this little argument. I just want to get a continuation trade here. Or you know what? Honestly, guys, here I'll show you. That other idea that I'm looking at aside from continuation is, again, kind of this descending trend line. It's a little aggressive. That's not going to sustain for all that long, at least as well as it could if it was more like this. Okay, but when you get really aggressive trend lines like this, it can be good for a trade or two or three, but that's not something that I can sit and really hit for hours. The risk of break just gets higher and higher the lower you go, or the higher you go, with a really, really aggressive resistance or support, respectively, trend line. All right, let's see if the bears can break it back downside through that low. There's the downside break through the low. Let's see if the bears can take it a little bit lower, more aggressively here. About 5 seconds out here from the rollover of this 2-minute candle. And the 5-minute for that matter. Closing near those lows. You look up top here, this gives you a good look. Kind of a mixed bag here. Bulls still, I want the bulls to step aside if we can get a downside push. A growing bear bar, a little bit bigger than here, closing on the low. In a minute 45 from now, if we saw that, I would sell that rollover. There we go. There's a bit of a push. Minute 20 out from the close of this bar. Need this one to get a little bit bigger here. Really verify those buyers. Stepping out of my way a little. Kind of give up on the prop, at least there. The prop up, that is. Beautiful. Getting a bit of a push. "20 seconds out from the close." Again, need to see that baby not wick. Come on, buyers, just give up. They're wicking it back upside. Oh, man. Now, we do arguably have a small little channel forming. We don't have our 3 touch points yet, though. I'm talking here, of course. Inside of really this larger draw, really a couple of ways. But that larger potential trend line that we're seeing. Again, not sustainable, very aggressive to the downside, but worth mentioning. Alright, bulls are making an attempt here. I do not buy it yet. Crypto student, if I surpass my profit target by 1K on Top Step, will I pass? I think Crypto just wanted to toss that out there. I don't know. I don't have a lot of experience with Top Step. If anyone else does, I'm sure he would appreciate an answer. Okay, well, we're still getting a battle here, guys. Neither side is really winning yet here. Again, I'm looking for 2 to 3 consecutive bars closing near the low or high, or a trend development or a channel development. All right, here's the test of the 20 EMA on the 2. The 20 on the 5, by the way, is a little higher. Similar region, though. So here's the 2-minute. We're really testing that 20 on the 2-minute hard, okay? If we can get a close near the high of this bar, depends on where we close, but that becomes a new idea. About 30 seconds out from the close of this bar, 25. Now, this is a test of that previous potential descending trend line. Okay, so I want to see how this bar reacts. In a normal setup, by the way, look at here. I would have bought this rollover right away because we got consecutive growing bull bars closing near the high above that 20 EMA. However, a couple of things. On that close, context, right? We were coming right into the 20 on the 5, worth considering. But also, look, we were coming right into this potential trend line for a third test. And I know that sellers are going to come in and get excited and short that. So I really, if we can get this bar here now pushing through, then it really very much so becomes a buy the rollover scenario for me. All right, so the third test, we are getting a bit of a rejection here. If we can get more of a downside follow through, all of a sudden that channel just became a lot more real. ATR is at 41.5. Not 39, it's at 41.5, which I am happy about. Seeing like a, what would we see, a 15 ATR this time of day last week? Oh my goodness. Not to complain, but now what we need is some price action, decisiveness. All right, 40 seconds out until the close of this bar here. See if we can clear the tops of those two previous 2-minute bars, and then get a rollover, and then see how that next bar closes. Yeah, I'm just kidding you, Scooby. Oh, baby. Come on, give me a setup. All it takes is two 2-minute bars. It takes 4 minutes to give me something good. All right, here's the test of that little high there. See if we can get through. Again, this is also, if we look at the 5 context, right? This is the 20 EMA on the 5 minute. "60 seconds out from the close of this bar here. If we can get a push up toward 375 and a close up there, we have 20 seconds to do it near the high of the bar. Then I will look at potentially buying the rollover, but we're not getting that push. We're kind of getting snagged on the 20 on the 5 minute, 5 seconds. Yeah, look here at that 5 minute, guys. We're just getting snagged on that 20. So the 2 minute just rolled over here. Now what I am looking at here, this has potential. Listen, it's so aggressive to the upside. That level has some potential, okay? I'm going to consider it, but it's a little too aggressive for me to go crazy on. Still getting snagged on the 20 on the 5. Man, you know, the trend line has me a little interested. But we also have to consider this pin. Now you have the 20 pinning that trend line, and we have to consider this also, right? I mean, that's a hell of a wedge. And you know what? It's only a wedge because I know that everyone on the planet sees that right now. Even if they're not looking for it, everyone sees that little wedge. Puts us in kind of a predicament, I don't know. And someone's gonna win here in a big way, I think. And I will be there to pick up the continuation pieces. Let's see what we get. All right, this bar closes in 10 seconds. See if we close. Probably going to close inside the little wedge here. Oh, man. There we go. There's a little push. There's the test of those highs of those wicks. Little flat top with the last few candles. You guys know I notoriously do not trust flat tops, especially on the Nasdaq. There we go. There's a bit of a push outside. Another minute 15 on this 2-minute bar. $35 seconds left on this bar. We're getting a bit of a push. Got to clear those sellers out of the way. If we can see a close at the high of this bar, up, I would say in the mid 370s, but more like 380 ideally, I'd buy that rollover. Without a second thought. Getting some pullbacks here. Close below 370. Let's see this next bar. There we go. There's a bit of a push. Beautiful. Okay. There's the test of 19.4. Now buying the close of that previous bar, that was a lower probability trade, but you can see higher reward to risk. Okay, it does that buy did not fit into my personal plan, but if you bought that, good work. And now we're getting a big old bull bar, a little too big, honestly. Because now we are heading into the high, which is going to be 462. I still need room. All right, but we have pretty much broken every prayer of a channel that the bears had in their back pocket. All right, 45 seconds out from the close of this bar. I don't want this thing to go too much higher without me. Not without me, I just mean I need more room for the buy on the rollover. But if we get a nice clean close near the high, here we are, wicking back downside. I mean, listen, what do we say, right? Someone's going to win this wedge in a big way. Looks like the bulls kind of pulled it together. Now we got to give it a 2-minute bar or two to see how this price action is going to develop here. All right, 25 seconds out from the close of this 2-minute bar. Come on, give me something here. A move upside with a close just ahead of that previous high would be just fine. All right, we're inside of that wick. You see this? There we go, clearing that wick. 65 seconds out here from the close of this 2-minute. We've been really having trouble with wicks of previous bars here today so far. That has been a problem. There we go, get a push. All right, we're coming into the test of that high. Oh, beautiful. 30 seconds out from the close of this 2-minute. All right, now give me a close near the high. Got 10 seconds to do just that. You see what I'm looking at, right? You get a wick above the high, and then you wick down and close inside of the high. I'm sorry, I just can't take that. I'm not sorry, actually. But I can't take that trade. That's not a good trade for me. So I know some of you guys are going to ask, here, look at the 5-minute. Kind of this peak here that we saw, right around 450. I'm not too interested. I'm more looking at 19.5, but again, that's a tier 2 level to me. Whereas like 20K might be a tier 1 level. 19.5 is just, it's tier 2, but I am paying attention to it more than that overnight, peak that we saw. No, King, no trades yet so far, but we're going to get some here. Don't you worry. Really what I need to see here is, well, here. That's the 5-minute. Look at this. 2 consecutive bull bars, ideally growing, clearing the high. I'm not too worried about 19.5 for a long entry. Again, I'm not thinking about that overnight high either. Just need my room. 30 to 40 points. Well, 20 to 40 points, really. Who's struggling with this high, but the good thing about this, we're forming a flat top. And I don't trust flat tops, so I expect that we're going to see at least an attempt of a break here. We're also sitting right at that break-even point. Again, those red to green moves, at least as of late, on the lower volatility side of things, we seem to have a little bit of trouble with. Yeah, listen, I have a feeling we're going to see this flat top at least attempt to break, and then if you give me 2 consecutive bull bars, I will buy the rollover. But we are chopping, baby. Now, a lot of these moves look really, in hindsight, they look easy to trade, right? Okay, well, you get this bar closing inside of this wick, right? You get this one wicking down. You get this bar closing inside of this wick. This move was not simple to trade, hence no trade so far. We're seeing that ATR come down, man. Look up top. See, now, the actual teal flag is relatively flat because we had that big outsized bar, right? You see those orange bars? We're seeing the range fall, but I think that's going to change when we see a breakout here. All right, well, here's the attempt at that flat top. Beautiful. All right, 15 seconds out from the close of this 2-minute. Heading into 19.5. Again, 19.5 is going to be kind of a tier 2 level. Good close there, not too bad. See if we can get it closed right, honestly, above 19.5. Right near the high. We got about 1:30 left on this bar. Just getting wicks. Just getting wicked down. Those sellers are stepping ahead at 19.5. That's okay. With every 2-minute bar, we get one more shot here. This one closes in about 15 seconds. Let's see what we get. All right, closing right here up top. This gives you a nice look. Right inside of the high of that previous bar. Sellers are trying to make this thing reverse. Let's see if the bulls can get up through 19.5. I'll buy that rollover happily. I'm in for the test at 19.5 here. Let's see. Yeah, in tier 2 level, I'm not concerned too much with 19.5. This isn't something I would just short. We're sitting kind of healthily 50 points in the money. I'm sorry, in the green now on the day. There is the test. All right, beautiful. We got 25 seconds. We're looking at this 2-minute here. 12 seconds out from a close. Get me a close above 12.5 and I'll buy the rollover. Give me something to work with here. Story of the day today, we're pulling back just below the tick of that previous bar. What we're seeing all day so far. We'll get something here. Just a beauty of a move here. 38 seconds out from the close. And we cleared here. At least attempting to do so. Let's see if we can get a close near the high of this 2-minute bar, and I will buy that rollover. See what we can grab. "12 seconds out here from the close. Beautiful, and we will. I'll buy the rollover of that bar, so sitting long. A few points in the money. Let's see if that works out. What's up, Chris? Welcome back. How you doing? Okay, now, I would manage this one down at 19,471 is where I'd cut this one. Again, sitting long. And target, I'm looking at 19,551. About 10 points in the money here. Target up at 19,551. Again, I'd cut this at 19,471. $15 points in the money. Now, worth mentioning here, by the way, guys, is we could be seeing a tight little channel form, but it's so tight that this is not a channel that I would trade anyway. I mean, realistically, the whole channel itself is 30 points tops. So you'll push up into the 30s. Target again, 19,551. If we struggle with 19,550, which I don't imagine we will, I would pull it a couple points early, but I'm not going to go into it with that mentality. Well, there's a push into the 30s. 24 points in the money right now. Again, target 551. Get me up into the 40s here. Boric, how did you come up with that price target? So, with continuation trades with open sky, so to speak, price targets a lot of times are going to be arbitrary. There's nothing to really go off of. That's a little bit different with reversion, like limit order scalping. But like buy low, sell high scalping. This is more like buy high, sell higher, ideally scalping with continuation. Different setup, but kind of my backbone. Two setups, the overarching umbrella term, right? So the price target with open sky, kind of high of day, continuation scalping is somewhat arbitrary. So 551 is thought ahead of time, but it also is kind of an arbitrary 40-point stop with the intention or the understanding that if we struggle at 550, which is not, that's like a tier 4 level, if anything, then I would pull it maybe 2 points early. But currently 15 so points in the money, 10, 15 points in the money. See if we can get a little bit more of a push. Get me up into the 530s, 540s, and give me a little bit more of a move. Tier 4, so tier 1 level, like 20k, is a level that everyone's looking at. Tier 2 is a level that a lot of people are looking at, like 19.5. Tier 3 is going to be a level that, you know, some people might look at, like 19.4 or 19.3. And tier 4 is like whatever, like 19.350, 19.550. All right, 23 points in the money currently. Again, target is 19.551. Give me a push up into the 40s. And just barely a pop through 550 and we're out. Let's see if we can get that. There's the test of the 40s. Yeah, entry's sitting at 511. All right, here's the test into the 540s. There we go, 33 points in the money. Again, gonna let it test 550. I'm not gonna pull it ahead of 550 just because I feel like it. Target at 551. Here's the test, and boom, we are fully out there. Here. I don't know, I didn't do the math. We're up like 1,400 bucks, obviously not including the sim, a little over. So that's 1,400 or so in one trade. Let's see what else we can grab. Obviously, I'm looking for a lot more than one trade a day. Market hasn't been too kind to us, but 1,401, not too bad, can't complain. Let's keep moving here, see what we can grab. Oh my god, Quicksilver. I know we all have been there on the wrong side of a move like this, and it is infuriating. It is not fun to be short in a move like this. Or long in a down move, but it always is like... you always start to justify, it is brutal. You start to justify, oh, there's no way it can go higher. Right? Whereas if you're sitting long, you're calm. Stay dumb. Do what the market tells you. Don't try to fight, especially the futures market. Don't try to fight that trend. do the math. What are we actually sitting at as far as P&L? $14.36 is where we're sitting. Do you think this is buy programs from institutions that make it melt up like this? Well, 70 to 80% of all volume is going to be institutional volume. And that 20 to 30% that's more like trading volume is really what can give us an edge. A lot of the institutional volume, sure, they're day trading, but a lot of them are, you know, buying one contract at a time, thousands of times a day, building into positions and then scaling out of positions. And a lot of times I think, not that I can be certain, none of us can really be certain, but I would think most melt-ups like this are going to just be sellers slowly stepping out of the way and buyers a little hesitant. Because if we look at the price action, realistically, this isn't like the cleanest up move ever. Sure, it looks like it, but if you look at it with a little bit more of an eye at really the close of each bull bar, okay, you'll see that we're getting a lot of wicks, a lot of pullbacks, a lot of closes inside the bars. The previous bar is high. It is not, like, really the entry that I took was like the cleanest entry we got. Aside from that, there really hasn't been shit. So that tells us that we're not just seeing overwhelming pressure from buyers. We're seeing sellers try to step in, mixing in a few red bars, and then stepping out of the way as buyers kind of hesitantly make their way in. And I think that kind of leads to a melt up where it's not like some massive, ridiculous move upside. It's kind of a slow grind higher. But I'm kind of still, you know, next trade, I'm looking for a similar idea here. Grind, grind, grind. All right, we're getting a couple of bull bars here. I'm kind of looking for the similar idea. The higher you go, obviously, the higher probability a trade becomes, but the higher the risk also becomes. So, kind of thinking of that. A minute 25 out from the close of this 2-minute bar. $60 seconds. So if we can see this 2-minute bar, again, we got about 30 seconds, close at the high essentially. I will again buy the rollover with the understanding that the probability since the first trade has fallen slightly. I'm sorry, the probability has gone up slightly, but the risk has also increased because we're now in a higher portion of the move, but that's what I'm watching. So seeing if we can get a close at the high of this 2-minute. Kind of wicking back here. 5 seconds. No trade, wicking back. A minute 10 until the close of this 2-minute. You guys know what I'm looking for by now, right? Damn straight, biscuit. It sounds like Scarface right now. I love it. All right, we're heading into 19.6, but that's fine. If we can get a close near the high, it's totally cool for me for a rollover buy if we can see it. All right, we got 15 seconds. I don't want to see a close inside of that previous wick high, right? So I don't want to see a close below this wick. We're closing right literally at the wick. To the tick, I think. Slow grind. Now listen, the risk with these slow grinds higher is you sometimes see a big outsized bear bar. That doesn't mean you should be scared of that. If you catch it, so what? Here's the test of 19.6. Just make sure your risk is managed right. Yeah, listen guys, if you haven't yet, please like the stream. Helps out a lot. There is an actual noticeable uptick in exposure when just a few people like it or when the chat starts moving. Which is cool. We're kind of holding off of 19.6. Wrench, would 19.6 be considered tier 1? I would consider 19.6 a tier 3. Ridiculous levels like 20k tier 1. What I would call half dollars, but like 19.5, 25, 21.5, right? Those are tier 2. Each $100 or 100 point level, I would consider tier 3. And then like the 50s, tier 4. Like 19.550, right? Tier 4. Barely pay attention to it at all, but I'd consider it sort of. John, done for the day up 550 in one top step and 590 in another top step. Submitted payout requests from both accounts on Friday. Beautiful work. Good job. No, this is straight. I'm a caffeine guy. This is straight coffee. Not much of a drinker. I'm over it. Well, bear is trying to step in here and kind of curl us over. We could be developing an ascending channel here, which would be cool. At this point in the grind, I might actually prefer a channel for some limit order scalping, buy low, sell high mentality. But I'll take a trend either way. Oh my goodness, a round trip. A round trip down to 19,250. Yeah, you know, listen, this is actually a conversation probably worth having. Caffeine and trading, do they mix? Now, I like the way caffeine makes me feel to a point. Now, if I have too much, yeah, you start getting jittery. When your fingers start shaking and you're trying to press your hotkeys, you've had too much. But some people, when they drink caffeine, and you really should get your finger on this pulse if you're going to trade. If you're very sensitive to caffeine, maybe you have a low tolerance, you don't have it very often. If it gives you anxiety at the screen, you should hold off until you're done. If you're still gonna have it during the day, you should probably trade without it and then start it up when you're walking away from the screen. And that also can feed into like, okay, when I start having caffeine, I'm done trading for the day, so you don't come back and blow up your day in the afternoon. I like caffeine to a certain extent for trading. And I prefer to have it in the morning anyway, so it doesn't seem to have a negative impact on my performance. But listen, I know a lot of people that they probably shouldn't be using caffeine while they're trading. And by the way, that's okay. Just get a gauge on how it makes you feel or perform. If it gives you anxiety to enter a trade and you're more at peace without it, then don't use it. It's just a tool. Use it or don't. All right, coming into 19.6. Go see if we can crack that 19.6, man. By the way, I wouldn't say that this is rejecting off 19.6. I'd just say we're at the intraday high. And that, to me, is I'm taking that more into consideration than the actual level. And 19.6 is going to be kind of a tier 3 level. Sean, what's up, brother? How's it going? Well, there's the break of 19.6. One trade so far today, we're up like 1,430, something like that, 1,400 bucks. Do I do any sports betting? I don't know. You know what? It used to be fun. I just don't find it fun anymore. Trading, I think you have to really separate that mentality with like a trading mentality. I just don't think it's worth it. Having any kind of gambling or betting mentality when trying to also simultaneously be a trader is kind of difficult to separate. And it's just not that fun anymore. I just don't really care to watch sports and have money on it. I just don't. To me, I don't know. I don't want to spend time doing that too much. But if we were going to the Super Bowl or something, better believe it. Well, we're definitely seeing some bears step in and slow things down. You see those 2-minute bars, they're kind of shrinking a little bit, but if we can get a break upside through this level and close near the high of a 2-minute bar, maybe 2 consecutive 2-minute bars, that, again, I'll buy again on the rollover. Look at how clean this move has been, man. Now listen, if you're trading this channel, I will just say, to me this is a little tight to be channel scalping. A little tight. I would prefer to see a little bit more movement. Okay, and in that scenario, I'd happily buy the support level in an ascending channel. If we can see this channel widen out, by the way, and stay ascending, then I will happily start trading that channel and channel scalping, but here is just tight. A little too tight, tempting a breakout just a little too much. Again, this is a game of a few percentage points. Most of the time, the futures market's going to be about 51-49 as far as probability. I like to wait until we're looking at 54-55 to 46-45. Alright, well, here's the test. Here's where we determine, okay, is this a channel? And if we can get it widening out, that'd be nice. Ideally with a channel, since I'm really looking for 20 to 40 points. Volatility's being kind of nice to us today. That ATR is sitting at about, I don't know, 28 right now, 27. I'd love to see this channel widen out. Again, it's a little tight for my taste currently. Mo, hey Nico, bad execution for me today. Got greedy, moved my target. Was up 60 points. Price pulled back on me. Got out with 25 points for the day. Seems fine to me. Would you expect a top tick? Just get your piece. Move on. 20 or 40 points? Thought you were scalping. I would say 20 to 40 points is scalping. Depends on the volatility. I would call intraday trading anything on average over 30 minutes. My trades on average are a few minutes, even with 20, 40 points. Sometimes if volatility falls while I'm in the trade, it can take, upwards of 15, 20, 25 minutes. I would still call that scalping. Micro scalping is a different story, which is, something else that I'll commonly do. But those trades, the average is way lower. Usually we're talking inside of the same bar. 2-minute bar at least. Okay, so we're testing the downside of this channel, but it is expanding a little bit. So we're coming into the 20 on the 2. Let's see if we get that thing breaking. If we get, I would say, well, this bar we have about 30 seconds left. I doubt we're going to see it on this bar, but if on the rollover we end up seeing a break downside, a close near the low of the bear bar, ideally same size or growing, I'd sell that rollover. But I know some of you guys are thinking, well, would you buy that 20 EMA? No, it's not relevant enough. Not enough people are watching a 20 EMA on any time frame, let alone the 2-minute. It's on there for context. Doesn't mean it might not work. It's just more like 51.49 in my experience. All right, I'll keep an eye on the chat. If something crazy happens, let me know. I'll be back in 2 minutes. Damn straight, if something crazy happens, it better be in all caps. The other day, I said the same thing. Gone for 90 seconds. I said, hey, if something crazy happens, let me know. I come back, something crazy happened, and no one said a word. Oh, gee, thanks, guys. All right, here's the test of the 20. On the 2. Let's see what we get. Now, you see here, we got that small, mushy little bounce here. You get a pullback, little bounce, and now a retest. A downside break here would not surprise me at all. We'll see if we get that. That could be a nice setup for another trade to the downside. Or I guess the first trade of the day to the downside. If we see it. Wrench, when copying 10 plus accounts with micros, do you notice a price deflection when entering? I.e. a drop if long. A drop if long. What do you think about what you're saying? If so, is this why you enter when the move shows the most strength in your direction? My continuation... I'm not sure I completely understand what you're saying. In my continuation entries... have nothing, the strategy there has nothing to do with the copy strategy. Boric, are you well, hang on. Let's see if we can get a downside break through here, the 20. Are you asking if my buying causes a change in the actual price of the security? If so, if I'm propping up, wouldn't that more so on the long side be a move upside? But the answer is no, because with most prop accounts, you're still in a sim environment. I don't think a lot of people understand that. So you're not affecting the market, and even if you were in a live environment, you would have to be trading with much, much bigger size to have a prayer of moving the thing even a tick. Okay, so we're getting propped by that 20, a little bit on the 2 minute, but that's not, it's not nearly relevant enough for me to just get long here. Watching for that descending channel formation. That's what it's starting to look like to me, if we get a rejection here. This here would be maybe you could call it the third touch point, but I would call it the second, because that first one wasn't real. Well, I don't know. We'll see if we get a nice rejection here. I'd like to see that range expand, though, if I were going to take an inside the channel scalp on it. At least 50 points wide on the channel, maybe 60. But we're seeing a little bit of collapse in volatility, so we can see if we can get that. All right, we're sticking to that 2 minute 20 EMA. Not for long. This thing's gonna move on. We'll just see which direction we go. Again, a downside break here would really not surprise me at all. Just because we got that retest. Again, a couple of mushy bounces here, I'm talking. We get this pullback. Attempt at a reversal. Slap down. Attempt at a reversal. Hold back to the 20. It's not uncommon at all to see breaks downside through here. But the reward to risk to probability ratio for my plan is off. So that's not an entry for me. I need more information. There you go. There's a push. Give you a better view here. Alright, see if we can get a break downside here. Good, if you guys haven't yet, please hit the like button. Helps out a lot. Seriously, whenever you guys do that, I see a little... It's noticeable. I'm trying to get... This stream, by the way, I just started doing the stream about a week and a half ago, and this will be daily, 8:15 a.m. Central for a minimum of 2 hours, but we pretty much always go 3. So I appreciate that from you guys. Downside break here, I think, is coming. We'll just see if we can get an expansion of this range here. Alan, good looking out, brother. Thanks. Bigfoot, what's up, man? Welcome back. Sean, 8:15 a.m. Central. Every trading day live. It seems like when you were trading your evals, you took many more trades per day than now. Market difference, couple of things. Market is different, volatility is down. Evals I trade far more aggressively than I do funded accounts. But if you guys are going to see in a video coming up here pretty soon how I trade evals, again, you'll kind of see that difference. But my trade quantity has certainly been down even in the funded just due to market conditions, but that won't stay the same for long here. Been able to still stay pretty consistent as far as green days, but not setting records or anything. Okay, here we are getting an attempt at a curl back upside. Here's really, this 2-minute gives you a nice view of that. See if we can get another test to 19.6. And if we see a breakout upside, all of a sudden, I'm back to trading a trend. Nico, when you trade here with us, is this the only time of the day that you trade? No, I don't think people realize I trade 2.5 hours pre-market every single day. Momentum stocks, typically small cap stuff. And then when I get off the stream, sometimes that'll be it. Sometimes I will trade maybe midday, some afternoon. But most of my future stuff is going to be here on the stream. But you guys seen the recap videos? Which I'll be posting some days. Here and there, I'll take some trades in the afternoon. But usually the bulk, at least as of late, has been midday. But that's not, I'm sorry, has been on the stream. But that's not a promise or anything. All right, let's get a push up through 19.6. That's fine with me. I don't care which direction we go as long as we get something outside of this little range here. This range here is what I'm talking about. Give me some kind of push outside of that, and that'd be beautiful. It's NICO. This is that moment we start to determine, are we going to see a little bit of a descending channel, or are we going to continue to the trend? I mean, honestly, guys, you look at it, we're only up 140 points on the session. It's not even 1%. I know a lot of people are looking at this trend like, oh, it's crazy, it can't go any higher. That's not too true. Sean, any perks to membership? I assume you're talking about the channel membership. I made the decision to make the stream 100% free. So, as far as that is concerned, the answer is no. For channel membership, right now, you can get like a little tag, emojis, who cares? But there may be a monthly Q&A for members only stream in the future. There may be some benefits as far as that is concerned, but right now, no, the stream's just free. Right now, if you want to support the stream, just watch the stream, watch the recap videos if you give a shit. Get the best deal, use the code, whatever, it's free, man. Yes, Replicanto is a great copier. I am using that as we speak. Any issues that I have with Replicanto are honestly NinjaTrader problems, so it's not even Replicanto's fault. But yes, I'm using that as we speak. Appreciate you, Bigfoot. Hey, Lee, trading in the afternoon is my worst time according to my logs, so I have stopped. That's a very mature decision that most people don't come to. The last hour was killing me until I started tracking it. Yes, if you track your trades, guys, what you'll find is, well, hang on. First of all, we have a test of 19.6 here. Let's see if we can get a push through into high of day, a couple of bull bars closing near their highs, and all of a sudden we're back to trading continuation. If you are tracking your trades, which you should be, a lot of times what you'll find is you'll have a big obvious like 2 hour peak, 2 to 3 hour peak in terms of edge profitability. And then as you get into the afternoon, for a lot of people it fades. Now sometimes for some people it can fade to red, or it can just fade to slightly green still. If you're in the boat where you make most of your money in like the mid-morning, and then through the afternoon it fades. If you're still green in the afternoon, now you have a decision to make, right? Do you want to trade for 6 hours a day and just make as much money as humanly possible? Or do you want to call it quits at like noon, let's say, or whatever time that your ROI starts to fade, and go work on something that you get a better ROI on, or just go hang out with your friends, your family, whatever, your kids, depending on how old you are? that's a personal decision. But if you're in a phase of your life where it's just like, okay, wealth building, I need to make as much money as I can and I will work as much as it takes, track your trades. And if you're still making money in the afternoon, just less, well, then keep working in the afternoon, keep trading in the afternoon. Here's 19.6, let's see what we get. And you just make a little bit less per hour on average. Right, but that's a personal decision. Life, well, work-life balance, I hate to say, but long-term, you're gonna have to make that decision. Okay, here we are getting a push into the high of day. Let's look at the 5 minute. At least an attempt, right? Wicking back just after a couple of ticks in the high of day. Let's see what we can get. Pull up the 2 minute for you. Adam, appreciate you saying so. Dan, appreciate it. Yes, if you're not tracking your trades, it's far too easy to not do. A lot of people, they push back. This is so common. A lot of people, they push back when I ask them to start tracking their trades or I tell them to do so. It's just too easy to not do. It doesn't have to be this 3 hour a day thing. It's like drag and drop. Or if you don't want to pay for some kind of trade tracking software, which totally cool, do it on pen and paper. It's not a big deal. It's maybe even easier on pen and paper because you can just do it while you're trading if you trade slow enough, which most people do. Okay, getting a pullback here. Now what we might end up seeing is a slightly ascending channel, but I need to make sure, or I need to wait to see what the market's going to tell us here. This, you look here, this is the 5 minute. This 2 minute chart, that 20 is actually being well respected. Though again, if you want to trade off the 20 EMA, fine, be my guest. I tried to make it work a lot for a long time. Specifically on blue chips and ETFs. And I just couldn't find enough meaningful edge to actually continue to justify spending the time trying to make EMAs work. They're just not quite relevant enough in my experience. What was that trade copier that you were using, testing with the futures desk? That's ETP. The developer, I had an issue with ETP, as you guys know. It sized me up. I was trading 1 micro, and it sized me up on a random, like, second or third trade of the day to 100, and just, like, instantly blew. Instantly. 5 funded Apex accounts that I had been working hard on for weeks. But they made it right. The developer reached out personally. He said, hey, this happened to you and 4 other people. They looked at through all the data. It happened to me and 4 other people. And he said, hey, we're just going to pay you for what it cost you on those funded accounts. And he did. And he fixed the problem. The developer at ETP is a great guy. And he is the most hands-on developer for a copy trader that I've ever seen. I have nothing bad to say about ETP whatsoever. And yeah, listen, guys, when people say journal your trades, you don't have to go pop for TraderView or whatever. Google Sheets exists. I did it in like an Excel spreadsheet for a long time. All right, still working on that 20 EMA here on the 2. You know what we're seeing now? Here, I'll just draw it for you. This is kind of what I have my eye on. And a flat top. Now, flat tops in futures, in a wedge scenario like this, flat tops, notoriously weak. Okay, so we'll see if we get a break upside. And I don't really care what direction we go here. Alright, no, I mean it. If something crazy happens, let me know. Back in 2. Alright, we are back, and we are still in this channel here. More like a wedge. At this point, an upside break through that flat top would not be surprising at all. And that would return us kind of to an uptrend mentality, and then we can start trading continuation yet again. Let's see what we get. Still respecting that 20 EMA here. It was actually very interesting. Got a question. Talking about scalping, do you always respect a reward to risk ratio? While scalping, I have a very high win rate, but negative reward to risk. That's very common in scalping, especially on futures. With futures, it's a little harder to find edge. You have less wind at your back in almost every case than you might on like a small cap momentum stock. So it's very common to take advantage of that by trading the outskirts, so to speak, of like a channel. Okay, because futures a lot of times will be a lot of back and forth compared to a momentum stock, which is a lot of parabolic movement oftentimes, right? So they're different instruments, they move differently, so it's very common for futures scalpers to have a high win rate, negative reward to risk. Now, as far as respecting reward to risk, it will vary based on the trade, but especially if you're trading prop, you're gonna wanna have a backstop because like Apex, for example, doesn't let you go beneath 5 to 1 risk reward. So for me, if I'm like micro scalping futures, I try to shoot for never less than like 4 to 1 risk reward, 4 to 1 to 4 reward to risk, right? Just because any slippage and commissions, you don't want to push yourself over that 5 to 1. All right, here we go. Test of the flat top. This gives you a better view here. Let's see if we get that break we were talking about. These flat tops can be notoriously weak. There's the test. Especially in an ascending wedge like this. And a rollover. That puts us in an interesting spot here. And there you go. There's the attempted break of the flat top. It's almost like it's a self-fulfilling prophecy. Right? That's really all this market is. That's it. Yes, listen, guys. On YouTube, YouTubers have a very bad habit of telling you, and I'm going to tell you why they do it, okay? That positive risk reward, or reward to risk is how I usually say it. That big ol' reward to risk, like 5 to 1, 10 to 1, is the only way to trade. You know why YouTubers tell you that? Because the video gets views. Okay? At least it can get a lot of views. You know why? Because risking $100 to make 500 sounds really cool. You know what they leave out? Because they probably don't understand the math? That probability goes way the hell down. And it's not fun to lose 80% of the time, or 78% of the time, or whatever it might be. So, I'm not saying it's a bad way to trade. You can trade any reward to risk. You can have a 95% win rate, risking way more than you make, and make a bunch of money. You can also have a 5% win rate and make way more than you risk and make a bunch of money. It's just a math problem. This is not a question of right or wrong. That is an incredibly simple understanding of a complex topic. Don't buy into that shit. Just find what works for you and your personality, what makes sense in your brain based on the instrument you're trading and how it moves, and then go with that and try to make the numbers work. But I'll tell you right now, if you're a beginner and you're trying to trade 10 to 1 reward to risk, can you make money? Sure, but you're probably going to quit along the way because it sucks losing 88% of the time. And by the way, what happens if that statistical outlier comes right away and you lose 24 trades in a row? You think you're going to keep going on 25? Probably not. Well, kind of a weak breakout attempt here. Market needs to make a decision so we can start trading it again. You guys remember this look familiar? Remember we saw this maybe an hour ago? Hour and a half ago? Big old wedge. Someone's gonna win here in a really big way. I don't care who, just give me a winner. John, I keep blowing accounts because of intraday drawdown. Well, there's two issues. Is your win rate really low because you're going for huge reward to risk, or are you holding looking for big winners? Or there's a lot of scenarios. Maybe you're going for, well, you say you're holding, but you could also be going for really tight, really negative reward to risk with a super high win rate, and when you catch that off loser, it just blows because you're risking a whole drawdown on every trade to make a little bit. You have to adjust the rules a little for prop trading, whereas you get more freedom in personal accounts. But for prop, you have to adjust a little bit, but still, a lot of different reward to risk can make sense trading prop. But Sean, what you should ask yourself is, why do you feel the need to hold for a big winner? Is it because your win rate is low? Is it because you're looking for some big reward to risk? And why? Ask yourself, why do you feel like you need to get that? All right, let's get an actual breakout here. We're kind of struggling right at this. It's not the 19.6, by the way. It's more just this flat top intraday high of day. Sellers stepping ahead of that, trying to take it back downside, but buyers propping up and us sending wedge here. Well, if you're just kind of joining us here and you don't have context of what's going on, we've taken, market has given us, I should say, one trade so far today only. We're currently up like 1,400 plus a little bit across all the accounts. Again, we're trading 2 Take Profit Pro accounts, 7 funded Apex accounts. By the way, Apex currently is 71% off single day pass, which means you can trade your evaluation, pass it in one day, one trade if you're crazy, and be funded the next day. Now, a lot of people, I get this question actually, code BIG, guys. It will always give you the best deal. No matter when you use it, the best deal they have available, it will give you. That just happens to be the deal right now. What's up, Christopher? How you doing? Gibbs plus 560. Thanks as always for sharing your knowledge, commentary with us. Good work. Good work today. Maybe lock it up, get out of here. As for me, I want to see if this break can hold. This channel's getting tight. Someone's gonna win here in a big way. Waiting for that to occur. You guys see these candles. You start getting wick after wick after wick. This is what they call chop. You try to scalp this, you're probably going to get chopped up, unfortunately. It's a little tight. Really, the volatility we're seeing maybe 20-point ranges per 2-minute bar, which is not a ton. But what I'm really still looking at here is this kind of ascending. We're starting to go, you know, we were seeing this ascending. Actually, it's better if I show you this. We were seeing this ascending wedge, right? This is starting to turn slowly into potentially an ascending channel. Just draw it kind of how you think everyone would draw it. But that starts to get kind of ugly, so I'm going to delete that, and I'm going to redraw this here. Now, if that could hold, what I would really need to see is volatility increase. Because I enter at the retest of that ascending support level. Best case scenario in this range, I'm getting, what, 10, 15 points? Doesn't justify the risk. Well, respecting that level, man. Just need volatility to increase a little bit to start to justify that risk. The level is there. That ascending support level is there. Now we just need the volatility to come in. Listen, guys, again, I will get a video out in the coming days showing you exactly how I trade evals. You guys see how I trade funded, at least in a slow market like this, which will correct itself, by the way. But we've been able to be very consistent the last week. Base hits. But evals I trade a little differently. I'll get a video out showing you guys how I trade, particularly Apex evaluations. I think that'll be helpful. So if you want, you can use code BIG, 71% off, single day pass. All right, well, I'm looking for volatility increase. You guys know what I'm looking at here. Hope you guys have a great rest of your day. I'm going to cut it here, 8:15 tomorrow morning Central Time. Subscribe to the channel, and I'll see you there tomorrow morning, every single day. All right, guys.